Welcome to Bentek's demo of Energy Market Visualizer. Today we're going to walk you through Bentek's new tool to analyze energy data across the energy spectrum. Today we're going to focus on data aggregation data from across the different regions within the United States, as well as look at some point level data and your ability to view that point level data within Energy Market Visualizer. From a perspective of the total U.S. market dynamics, Energy Market Visualizer allows you to visualize very macro pieces of the U.S. market in a very quick glance. On the screen, you'll see in front of you supply from each of the individual regions within the United States. Encompassed within this are 8 regions within the U.S., which include the Northeast, Southeast, Mid-Con producing, and others, as well as markets in Canada West and Canada East. From this graph, you can see it's a relatively short time frame, just from the first of the year until today, April 9th, a 3-month span of data across the United States. You actually, from a supply perspective, don't see a whole lot of variation within these graphs, although you do see a brief spike here in the Southeast. You can see the change in onshore production, offshore production, and the very small amount of LNG that's coming into the market. However, you see a lot of variability within the Eastern Canadian market. This is largely due, though, to the change in scale. So to get some perspective, let's click on our scale on the right side of the graph here to provide an overall perspective on the impact each one of the changes in these markets has on the overall U.S. market. From this, you can see that large fluctuation in the Eastern Canadian market really doesn't mean a lot in terms of the overall North American supply picture when put in perspective to the large amount of supply that's coming into Texas from the Southeast, supply from the Southeast in general, and as well as other markets in the United States. But supply itself doesn't generally vary a whole lot on a daily basis, and even on a monthly basis in a lot of perspectives. On the demand side, you see a lot more variability due to weather, especially during this time frame where the U.S. market is transitioning from the colds of January into the shoulder months of April. So from our drop-down menu here on the left side, we can select from a various assortment of different fundamental pieces as a part of each one of these regions. I will go ahead and select on demand to see the impact on the demand markets over the last 3 months. These graphs show a lot more variability in overall market impact, a lot more variability and market impact due to weather and due to other functions in the market. In the Northeast in particular, and we'll focus here, you can see that Northeast demand has peaked way up here above 20 BCF per day, but more recently has seen a drastic drop as of late in the last month or so. We can actually expand that graph and look at that overall time horizon and see that dip and the magnitude of that dip, where it has in early March it was around 20 BCF per day, or a little under on average, and has transitioned down to just maybe a little over 12 BCF per day in total. So you see about 8 BCF of total demand impact. You can actually slide your scale down here to zoom in just on that little portion of the market to look at the overall impact in a more minute way. So you really see that 20 BCF or a little under to around 12 BCF in terms of total market impact. Now, what we'd want to look at from this perspective is, well, what happened to the other fundamentals that impact the Southeast region? What happened to the other supply sources that are impacted by this change in demand? One of those pieces could be the inflows into the region. So I'll actually go here and click on our net flows graph, which will show us the net flows into each one of these individual regional markets. You can again look at the Northeast and see a drastic drop in net inflows. We'll go ahead and break this out and look at it in more detail and see that of that 8 BCF, you had about 8 BCF or so coming into the region here, and that dropped down to around 5 BCF. So we actually lost about 3 BCF of demand, or excuse me, of net inflows into the Northeast market based on that fluctuation in what's coming in, or based on that fluctuation in demand. So the other, out of that 8 BCF that fell out of the market from a demand perspective, around 3 of it was impacted, or around 3 of it came out of inflows into the Northeast market. If we then wanted to look at the individual corridors within that market, we could actually break down into the corridor flows and just look at which corridors feeding that market were impacted the most. This map actually loads all of the inflow corridors between each of the regions in the United States. So here you can see Southeast to Northeast, Mid-Con market to Northeast, and Canada Northeast. We can break each one of these out and begin to understand the net impact on each individual corridor. So from the Southeast to the Northeast, you can see that drop, or of that 3 BCF in net changes in flows, a lot of it, around 2 BCF, actually happened or impacted that Southeast market. We can again actually use the button zoom up front here to break into that dip here and see down to 4 BCF and then ultimately returning back to 6 BCF, which was likely driven by weather. Just to give some perspective of what the weather did and a little bit of confirmation that the true demand destruction was due to weather, we can break out our map and actually look at weather here, HDDs and CDDs, or average temp. For this look, we'll look at just HDDs, and you can see right here on Northeast HDDs and CDDs, that large drop. Breaking it out again, you actually see these the HDDs drop all the way down to where it almost transitioned, and you start to see CDDs come into the market for the first time really this year. So ultimately, we've seen that the weather's impacted the Northeast market. It impacted it in a pretty significant way by about 8 BCF per day. About 3 of that came out of net inflows into the core or into the region, but the other 5 BCF still needs to be accounted for. And we can again break out our cell model flows, look at one of the other fundamental components that drives supply and demand within a market, which is storage activity. So here you can see storage activity took a drastic switch within the market. We'll blow this graph up also to look at the individual days more clearly and see that storage activity actually fell from a peak of around 5 BCF almost down to around 3 BCF. So really, ultimately, that other additional 5 BCF per day that demand impacted in the market was ultimately absorbed by storage. And you can really see a distinct change here in the market where Northeast storage is ultimately transitioning to a point where it was withdrawing gas prior to March, and now from most of March and into April, it started to inject a significant amount of gas. So this leads us to the question of, if the Northeast has begun to inject gas, where does that leave the Northeast as a whole from a perspective of where do inventories sit and how might that impact the market? You'd also want to understand from that perspective where price is. So first we'll just look at inventory levels. If we drop down to our drop down here and look at storage inventories within each of these different regional markets, we can see that Northeast storage is ultimately flattened out, and many of the other storage regions are starting to flatten out or even rise, as is the case of Mid-Con producing, Southeast, Texas, as well as the Southwest market. However, for a perspective of storage inventories, it doesn't give us a whole lot of perspective on where storage inventories sit relative to history. So I'll go ahead and select from our map a different time frame which will give us more perspective on overall inventory levels. Instead of looking at a 3-month time frame, I'll expand this back to 2011, and we'll look at that basically 16-month time frame from January 1st, 2011 to April. And from here, you can really see the drastic impact that those additional injections into storage might have on the market, given that the Northeast market as a whole was down around 200 or less, or around 200 BCF back last year, and now is closer to 500 BCF. We'll expand this just so we can see it a little more clearly, where you can see that drop to around 200, 250 BCF, and now it's around or over 500 BCF. Again, you can change this to different time frames, or even use a slider down here at the bottom to look at different levels over time. if we just glance around the market, you can see that the Northeast is not the only region in the United States experiencing this drastic change in inventories or this drastic adjustment in inventories. The Southeast is close to back to normal with the previous year. You can also see a dip in storage inventory levels based on higher summer demand likely, as well as you can see that in Texas. But overall, inventories in both these markets are still fairly robust as they are in the Mid-Con producing, the Mid-Con market, and many of the other regional markets across the United States. Ultimately, that leads us to the question of what's the impact on price? We can look at just the spot market and see that overall natural gas prices across the United States are certainly trending lower. The Northeast in particular, if we expand this graph, along with other regions, are seeing a dip from where they historically have been around $5 per MMBTU back in early 2011, now to where they're around $2.50 per MMBTU. This graph is showing the Northeast Dominion South price as well as Transco Zone 6. One other interesting thing of note is that Northeast, which had wild fluctuations previous winter, actually has had very minor fluctuations this winter. So there's been a lot less volatility in that Northeast price. EMV Energy Market Visualizer also allows you the ability to see these prices from a basis perspective, so with respect to Henry Hub. And from that perspective, you can again break out the Northeast graph and look at Transco Zone 6, which again shows very little volatility in comparison to last year, and then really look at Dominion South, which is barely visible based on the zero line. I'll go ahead and zoom in to 1 month so it's a little more transparent in what's happened to Dominion South, especially Dominion South over that period of low demand in the Northeast, where prices at Dominion South ultimately cratered below the zero line to a negative basis level to where it was actually trading behind prices in the Southeast, and has since lifted back up to where it's around 10 cents or thereabouts. So all of these graphs are available to analyze and view the market in a very macro way once you're glancing across the market as a whole. But one other interesting way to look at it, or once you understand these impacts, you may want to break down and look at the market individually by individual components of this graph. And that feature can be completed by creating a new map and being able to create your own custom map. For the purposes of this demo, I've actually already created a custom map. So I'll go ahead and press cancel. I'll do the drop-down menu here and select a map that I already created. This map is now showcasing many of the graphs that we saw in the previous sections or regional market fundamentals, where you can see Northeast inventories, the extensive amount that they are over last year. You can see supply in the Northeast versus the inflows. So you're actually seeing the dramatic impact that Northeast production here are having on, or Northeast production here in blue are having on inflows as a whole into the region over time. You can look at the Southeast and the trend downward. Again, you can expand these graphs, and you can select and look at individual throughputs you see or individual levels on a daily basis. You see the combined total there in orange at the bottom, 7.1 BCF per day, or 7,167 MMCF per day on March 5th, 2011. As well as the average over this time period. So there's an average flow of 6.7 MMCF per day, a min value of 4.163 MMCF per day, and a max value of 8.963 MMCF per day. Interesting, if you look down to more recent times, again, during that drastic dip in demand in the Northeast, that is the point at which over this 16-month period, the Southeast corridors flows to the Northeast hit their lowest level in this time frame. But certainly these are the graphs that I selected to look at how the Mid-Con market's being impacted by Northeast production growth, how you can look at individual pipeline flows and how they're being impacted by Northeast production growth. you can actually extend this graph into an even later date time frame back to 2009 and look at even longer trends in the market. So here, within the mid-con market to the northeast, you could expand this graph and see REX here in this light blue color coming into the northeast market and starting to supply a lot of the gas or a lot of the demand components in the northeast market, as well as the impact that has been had on REX more recently with changes in demand and changes in basis prices within that overall market. And again, you aren't just limited to these graphs. You can add other graphs. For instance, if in the Canadian Northeast market you'd rather see this by pipe, it's easy to add those different objects. I'll go ahead and click on our Objects menu on the left here. I can click on Fundamental Charts and choose from a selection of charts that are available for this market based on all the fundamental charts that were available in the cell graph. If I go down to corridor flows by pipe, I can look at Canada East to the Northeast and load that chart. That chart pops up here. We can expand it and look at each individual pipe that's flowing into that corridor and see that, for instance, Tennessee at Niagara as well as the Empire Chippewa Point have pretty much vacated from the market, while Iroquois at Waddington has remained relatively steady, although you see some displacement out of Iroquois into that northeast market. Since I have and like that Canada East to the northeast by pipe better than I like the flows, based on my ability to see the individual pipeline components, I can go to my Summary tab, look at my corridor flows, Canada East to the northeast, and actually select that graph off so that it's no longer available. I'll go ahead and, just because I like the positioning, move my northeast, Canada East to northeast back over closer to where it was, where the corridor flow graph was. So again, you can break down and look at each one of these component levels or each one of these fundamental levels in the Northeast region on its own and start to dissect the market and monitor and basically create your own custom report that allows you the ability to view different components of the market. However, you're not just limited to Bentek's corridor flows, which again are a balanced approach to looking at each regional fundamentals. You also have the ability to look at individual pipelines, flows, and capacities within a market. I'll go ahead to my Summary tab here, and I'm going to click None to remove all of the graphs that I had put on my custom map before. I can go back to my Objects tab and start to add individual pipes by clicking down here on Pipe Maps, Pipe Points, and look at some individual markets. So from a regional perspective, I'm interested to see what is the individual components that are on that northeast, or Canada to northeast flow dynamics. If I click on northeast, it automatically opens up the pipelines that are available in the northeast. From there, I can hone in on the pipes of interest. So for this demo, I'm going to look just at that Iroquois pipeline and see what are the impacts on Iroquois and what point continues to flow fairly robustly as opposed to some of the other points in that market. If I click on Iroquois, you'll note on the map that Iroquois has popped up over in the northeast market. I'll zoom in over on Iroquois to get a better perspective and look at what's happening on that individual pipeline within the market. You'll notice that over on the left side of the screen, since I clicked Iroquois, a new tab has popped up which shows points. If I expand that points tab, it'll give me Iroquois and say there's 26 different items that I can select within Iroquois. Using the plus sign, it expands those into interconnects, so interconnects with other pipelines, LDCs, local demand carriers within that market. There's some pipeline administration points, and then there's power plants. These are the components that each pipeline is required to post by FERC regulation, allowing you to look at the individual components on that pipeline. For simplicity's sake, let's just look at the 5 interconnects on Iroquois' system. We can click all, and you'll see there's 5 individual interconnects with other pipelines on Iroquois' system. If I go ahead and click on the label over here, we can actually see the names of each one of those interconnects from Waddington all the way down to Shelton. For an inflow perspective, I'm keenly interested in what's happening at Waddington. I can click on my Waddington point and see Iroquois interconnect, facility type. There's a component ID, which is a reference ID to all the data within Bentek's database. There's flow data status. There is flow average, so what that point is averaged, and then a location type. I can then graph that individual point and look at the overall flows at that Waddington meter over time. Again, we can expand our graph and look at the individual flow dynamics within that Waddington meter over time. If this graph is of particular interest and I wanted to send that to a colleague or at least send the data, I could actually click up here, select export. I'll go ahead and open that file in Microsoft Excel. And the data would pop up showing you the time frame which you selected and all the points coming back for the Northeast on Iroquois, Waddington being right here, MMCF per day over time, down from my date selected 1/1/2009 all the way through the present. You could then send this data to your colleague so that he could use an analysis or additional graphing. So that's the demo of Energy Market Visualizer. There's a variety of different functions available within this tool, allowing you to add different pipes, different points, different reference frames for looking at individual regional analysis. You also have different layers that you can add, from states to counties to rivers to lakes, as well as different measuring tools within the EMV application.